In today's video, we're going to take a look at an important matter that affects global trade and, more importantly, global payments, especially since the war has begun in Eastern Europe between Russia and Ukraine. There has been a lot of discussion about how banking systems would work, how would global markets react, what are the ways forward to facilitate trade between countries that trade with Russia. Hello everybody and welcome to this video where we take a look at several options that have been considered by Indian importers and Indian exporters to Russia to facilitate Russian currency movement within India as well. For the last 8 decades, the dollar has been the dominant currency. In fact, even in non-dollar countries, dollar has been the currency of trade for imports and exports. And therefore, in this sudden era of economic sanctions, banking sanctions, payment sanctions on Russia, how is it possible to eliminate dollar as a currency to facilitate trade between the two countries? Is this even possible? So let's take a look at how the scenario has evolved in the last few months. The points of discussion in today's video would include what was the existing pre-war trade between India and Russia and how payments were facilitated in the earlier scenario. Now, with the new sanctions imposed on Russia, what could be the possible options? How trade is going to be affected because of these banking sanctions? Is it possible to do a direct bilateral payment between ruble and rupee, the currency of Russia and the currency of India, without having to intervene through the dollar market? And is there any possibility of going ahead? Let's start with how we looked at the pre-war trade between India and Russia. We had India, which has the main currency as INR, and Russia, which has the home currency as ruble. There has been significant trade between the two currencies and the two countries for the last many decades. India imports and exports from Russia, so does Russia from India. And this continuous movement of trade has resulted into the existence of a robust dollar INR and dollar ruble market. So let's take a look at how an Indian importer used to facilitate trade from the Russian exporter. So the Indian importer purchased goods from Russian exporter. The Indian importer could not pay INR to the Russian exporter. What will the Russian exporter do with it, right? So the Russian exporter could not pay in ruble to the Indian importer. What will the Indian importer do with rubles? So therefore, the Indian importer had to make a payment in USD to the Russian exporter. Okay? Now, neither is the dollar the home currency of India, nor is it the home currency of Russia. Yet, trade was facilitated because the invoice was in dollars. This is a very important thing to understand, that even in non-dollar countries, okay, where USD is not the home currency or USD is not even the acceptable currency of trade within the country, USD is necessitated for trade between the two currencies. So the Indian importer had to make a payment of USD to the Russian exporter. How did this take place in the earlier scenario? Let's take a look at the payment mechanism that happened between the Indian importer and the Russian exporter in dollars. The Indian importer had to make a payment of dollars to the Russian exporter. How will he get this payment? The Indian importer will buy these dollars from the Indian bank. Okay? The Indian bank will make the payment of USD to the Russian bank. So let's understand this flow first. The Indian importer has INR. It gives INR to its bank, the Indian bank. The Indian bank converts the rupee into USD. The Indian bank then pays USD to the Russian bank. Okay? The Russian bank is a banker to the Russian exporter. The Russian exporter would receive the USD from the Indian importer. Is this clear? So therefore, banking channels played a very important role in the payment mechanism. One part of the leg is the trade leg. The second part of the leg is the payment leg. And the trade leg was easy. But trade leg cannot conclude without the payment leg, right? So payments are very much a robust part of this ecosystem. So to recap, the Indian importer gave INR to the Indian bank. The Indian bank converted the INR into USD at the prevailing market rate. It transferred the USD to Russian bank through SWIFT, that's the Society for Worldwide Interbank Financial Telecommunication. The Russian bank will receive the SWIFT communication from the Indian bank and then inform the Russian exporter that yes, you have received the payment. Okay? This is how payments was typically taking place between Indian importers and Russian exporters through the banking channels of the respective currency. And to facilitate the cross-border payment, we use the mechanism of SWIFT, that is the payment mechanism and the messaging platform. What about the Indian exporter? The Indian exporter is going to receive dollars from the Russian importer. We are exporting several amount of textiles and handicrafts, etc. to Russia, and we are receiving from them dollars. So now let's again take a look at how the payment mechanism worked. To reiterate, dollar is not the home currency for Russia, nor is it the home currency for India, and yet the payment was made by Russian exporters to Indian, by Russian importers to Indian exporters via the USD. This is a very important part to remember that even though dollar is not the home currency for both Russia nor for India, the invoice or the trade transaction was being facilitated only because payment was made in USD. How will the payment take place? The export trade was facilitated again through the banking channels. The Russian importer advised its bank to pay dollars. Okay, to whom? To the Indian importer. The Russian importer will give ruble to the Russian bank. The Russian bank will convert the ruble into USD. The Russian bank then uses SWIFT, SWIFT, to make the payment to the Indian bank. The Indian bank then makes the payment to the Indian exporter. The Indian bank converts the dollars into INR and gives the payment to the Indian exporter. So to reiterate, even though USD is not the home currency for either Russia, neither for India, the invoice of the trade is in USD. Because USD is a dominant currency in the world, the banking system of both Russia and India will have to utilize SWIFT mechanism to facilitate cross-border messages as well as cross-border payments. So the import and export trade both from India as well as from Russia was facilitated via the dollar through SWIFT. Okay, there was of course foreign exchange risk. There was of course dollar USD INR volatility. There's of course USD RUB volatility. But all this was managed as part of the overall FX risk that has to be borne by the Indian importer or the exporter, depending on which leg of the transaction they are on. So this was a basic idea of how banks across different countries facilitated trade between importers and exporters in order to move goods and services. The pre-war payments necessarily involved the USD INR leg. It still does, and it also involves the USD RUB leg. Now see, USD is in both legs of the transaction, USD INR and USD RUB. But now what has happened? Because of the war, there is no USD. Russia cannot use the dollar it holds in US banks. Russian banks are removed from SWIFT. SWIFT has banned any kind of transactions. As part of banking sanctions, they have banned all kinds of transactions with Russian banks. The Russian central bank, even though it has almost $600 billion of foreign exchange reserves, cannot use the foreign exchange reserves. So in the previous slide, we saw that USD was necessarily a part of the transaction of payment between any country that Russia trades with, right? But now USD itself is not being allowed to be transacted. There is a ban on the movement, on the usage, and the flow of USD from Russia to the outside world. Almost all of Western Europe buys gas from Russia, but they can't make a payment because If they have the dollars, they have the currency, but they can't make a payment because SWIFT says, sorry, we are not facilitating any transaction to the Russian banks. So, banking sanctions have been imposed, market sanctions have been imposed, and therefore the dollar leg is not being able to be executed. This poses a big problem for the traders, right? So then the Indian Commerce Ministry, along with the exporters and importers, sat together and said, can we have a bilateral payment directly by contravening the USD? Don't have USD at all. By bypassing the USD, is it possible? So the proposal came that they let the Russian banks open INR accounts with Indian banks in India. And therefore, let Indian banks open RUB accounts with Russian banks in Russia. Okay. Now look, Russian banks hardly have any presence in India. And other than SBI, I think there is no other Indian bank also in Russia. But in order to boost the payments, the Nostro accounts are being proposed. Nostro account means our account with you. I have already uploaded a video on Nostro Vostro in FX settlements, the link of which is shared in the comment section below. Russian banks will open an INR account with India, Indian banks in India. Indian banks open RUB accounts with Russian banks in Russia. What is the fund flow? Let's take a look at how the funds will flow now between the importers and the exporters. The Indian exporter, the Russian banks open INR accounts with Indian banks in India. Russian banks open INR accounts with Indian banks in India. The Indian exporters are directly paid in INR. Okay. Till date, Indian exporters were paid in USD. So they could get any advantage of dollar appreciation. But over here, we're looking at the situation of the Indian exporter who will be paid directly in INR because the Russian bank has opened the INR account with Indian banks in India. This is the fund flow. What about the importer? Let's take a look at what is the fund flow over there. The Indian importer, the Indian banks open RUB accounts. RUB is ruble, that is the home currency of Russia. They open RUB accounts with Russian banks in Russia. The Indian importers make the payment in ruble. Okay, so directly there is a payment made by the Indian importer through the Indian bank which has a RUB account with Russian banks. So in these two cases, both from the Indian importer's point of view as well as from the Indian exporter's point of view, there appears to be no intervention of the USD at all. In fact, the USD leg has been completely bypassed. And do we think that this is possible? There are two big challenges over here. Okay, until date, this has not yet been done. It has only been explored. So today is almost 3 months since the economic sanctions and banking sanctions have been imposed on Russia. But yet, payments are not yet been routed through this mechanism. This is because of the following challenges that we are going to look at right now. If this sounds too simple, remember that India imports more from Russia than it exports into Russia. That means the Russian exporters will have too much rupees. And what will they do with the rupees? They can't buy gold, they can't buy USD because it's not allowed to be traded. Even if they buy gold, they can't use INR to buy gold, right? They have to convert INR into ruble, for which again there would be an association of purchase of gold through the USD leg. Indian importers will need too much of ruble, and if they have too much of ruble, what would happen? There would be an artificially high price of RUB INR in the Indian markets because of the balance of payments, balance of trade that has been tilted towards the Russian exporter. So what would happen? The RUB INR would be much higher in India compared to the rest of the world because there is a artificial scarcity of RUB in India. And frankly, in the Indian markets, RUB is not traded at all. In fact, it's a very rare transaction that takes place only for the exporters and importers of India, and there is no currency speculation as such on the RUB. Therefore, Indian importers will have a big problem because they might end up giving more rupees for the same ruble as compared to, let's say, a German company, or let's say as compared to a Hungary company, because their currency would be different compared to the RUB. And therefore, the confusion would arise as to why should the Indian importer pay too much or extra rates or higher premium for the ruble just because of the balance of trade situation between India and Russia. So this has not yet happened. Even though this opportunity is being extensively explored, it has not yet happened. The second challenge is a swift ban on Russian banks. Because of this ban, Is it possible to use the Russian messaging system? So Russia already had in place a messaging system called as the SPFS, which stands for the System for Transfer of Financial Messages. It's in Russia, in Russian language, and therefore the loose English interpretation would be System for Transfer of Financial Messages. But largely, this has been used only for domestic payments and has not yet been used extensively for ruble dollar payments or for external currency movements. So this SPFS is being recognized only by Russia and its allies like China or Turkey, and therefore the payment mechanism into Russia is still struggling with getting that kind of acceptability. Every product is good. Like, look, we use Google, right? Google is a great product. Is there a greater product? Of course, there could be a greater product, but we don't use it because we are not aware of it. Whereas all of us automatically search on Google because we are aware of it as a search engine. So this way too, Swift is being used for the last 5 decades in the global banking system, and banks are very comfortable with Swift. To change from Swift, not to change from Swift, but even to add on another messaging system which is global in nature, international in nature, cross border, brings into picture all the rules and governance requirements of KYC, AML, etc. into the system. So, therefore, whether all the banks in India will accept SPFS as a payment mechanism is still to be seen, and we are still waiting for directives from the Commerce Ministry as well as the RBI as to how do we facilitate the payments between the two countries. Thank you very much for watching this video, and if you like the content, please share your comments. If you need any topics to be covered, please let me know. In fact, 2-3 people had written to my email ID asking for this coverage on RUB INR trade, and therefore I put it up. Thank you so much for watching this video. I'm your learning partner Sushila Hariharan, signing off for the day.